Now let's do another question as well, which is question number 19 now. Please make sure you redo this question, which it was question number 4 of the BPP exam kit. Please make sure you redo this portion which I have just told you, and then you can, after redoing, you can check the answer from the at the back side of the exam kit as well. Now let's come to question number 19 of BPP exam kit, and it was examined in December 2013. Question name is Pescara. If you come to page, if you come to the requirements, please, and we'll only do part B of this question. So calculate the Pescara's capital gains tax liability for the tax year 17-18 on the assumption that enterprise investment relief is claimed in respect of the shares to be purchased on 1st of April 2018, and that entrepreneur relief is not available. And then the second portion, it says, state the capital gains tax implication for Pescara selling the EIS shares at some point in the future. Now, what is part B2? If you look at part B2, which is worth 3 marks, state the capital gains tax implication of Pescara selling the EIS shares at some point in future. Now, this is worth 3 marks. Now, if you go back to chapter number 1, where we have read EIS shares, now under EIS shares, whatever the whatever the capital gains tax portion of EIS was, just write down that same thing here and you will get 3 marks. Now if you want me to show you, actually I will show you as well from the notes. Let's go back to chapter number 1 where EIS was. Actually, I think it's not chapter 1, it is chapter 3, I think so. Excuse me. Chapter number 2. Now, where EIS is, this portion which is relevant to capital gains tax relief, just write these 3 things which are given on your screen, and you'll get the 3 marks easily. So it says that where shares are disposed of after the 3 years period, any gain is exempt from capital gains tax. If shares are disposed within 3 years, any gain is computed in the normal way. If the EIS shares are disposed of at loss at any time, loss will be allowable, but the cost will be reduced by the EIS relief. So it will earn you 3 marks. It is exactly the same thing if you want to write down. And you can check from the back side of the exam kit anyway. So B part 1 was 6 marks. We'll just read the question, and I will just cancel the shared screen so that we can do it on the screen, on the board. So let's read the question. Marina lifetime gift. We'll read from here. On 1st of February 2013, Marina gave Pescara 375,000 shares in SPLC. So this was a gift of 375,000 shares in SPLC. And now this question, before we continue reading the question, this question is relevant to the shares and the reorganization and takeover, which we have studied in the previous lecture, I think, right? So how to calculate the shares, how to calculate the value of the shares, we know that it is lower of the quoted, the lower quoted price plus the difference between higher and the lower quoted price. And the second thing was the marked bargain, highest and lowest, will take the average of that. So that thing and reorganization and takeover. So we will test both of these things, then you will understand this concept in a better way, and it is very, very important from exam point of view as well. So Marina, gave Pescara 375,000 shares in SPLC. Marina had made no other lifetime gifts. Marina gift of 375,000 shares in Spank PLC to Pescara. So that was a gift which was given to her. Excuse me. So Marina purchased the shares for £420,000. So these shares were purchased for this amount, and Marina gave all of the shares to Pescara. Shares were quoted at 1.84 and 1.96. Now this is the quoted price. Now we know how to take it when we will calculate the value of it. So we'll take lower quoted price, which is 1 184, and the higher and the difference between higher and lower quoted price, and we'll add both of them. So it will be 184 plus 196 minus 184. So whatever the answer is, we'll take that, and the other one will be marked bargain. So the next one, it says highest and lowest marked bargains were 180 and 192. Now there is a mistake in this exam kit. Please make sure you rectify this mistake. There is a mistake in the question. It is not 1.80. It is not 1.80. It is 1.90. Please make sure you rectify it. It is 1.90. It is a mistake in the exam kit. So 1.90. The highest and lowest marked bargains were 1.90 and 1.92. Right? So in order to take the average of that, we'll take 1.92 plus 1.90, and whatever the average is, we'll take that one, and the other one, the quoted thing one. So whatever is lower of them, that will be the price. Excuse me. Right then, assume that the valuation rules for gift of quoted shares applicable. Assume that valuation rules for gift of quoted shares applicable in the tax year 16-17 also applies in the tax year 12-13. Right then. The shares did not qualify for business property relief or capital gains tax relief. Now, acquisition of SPLC by ZPLC and subsequent bonus issue. Now, what happened is that Pescara had these shares of S Limited, but the shares she holds now, this company is took over by another company. So another company took off this, taken over, the S Limited. So the new company is now Z Limited and ZPLC. So ZPLC has taken over, SPLC. So Pescara, who held shares in SPLC, will now have shares in ZPLC. So ZPLC will give new shares and will take off the old shares from Pescara. So that's what it is doing in the question. Acquisition of SPLC by ZPLC and subsequent bonus issue. On 1st of January 2015, ZPLC acquired the whole of the ordinary share capital of SPLC. Pescara received 30 pence and 2 ordinary shares in ZPLC. Now what ZPLC is doing is giving 30 pence as well, and on top of that 2 shares in ZPLC for every 1 share what she had in the SPLC. Now the shares in ZPLC worth £1 each. So that's what it says in the question. So Pescara received 30 pence and 2 ordinary shares in ZPLC worth £1 each for each share in Spang PLC. And the takeover was for genuine commercial reasons and not for the avoidance of tax. ZPLC declared a 2-for-1 bonus issue as well on the later date in the next year. So bonus shares simply means that we will add the shares, but there won't be any cost of that. So the eventual cost per share is going to be lower. Then it says Pescara actual and intended capital transaction in 2017. So she sold shares in ZPLC for £445,000, and then she bought some shares in EIS company, which is £50,000. And that's it. So now we'll have to do the question. Now just cancel the shade screen. Please make sure you keep this question in front of you as we will do the question now. It is question number 19 of BPP exam kit. Right? So on page 28, at the end of the page 28, it says that she's selling some shares. So she's selling 1 million shares in ZPLC for £445,000. So let's start the question. We'll write down sales proceeds. So whatever the amount is, how much is the amount? £445,000, £445,000. And these are 1 million shares. In ZPLC. Right? Let's calculate the cost. And for cost, we will have to do workings. right? So she's selling 1 million shares in Z plc, but we will have to see that how many shares in total she holds, because only then we will be able to calculate the cost of 1 million shares, won't we? So first thing is to figure out how many total shares she holds in Z plc. Now, in order to calculate how many shares in total she holds in Z plc, we will have to see how many shares she held in the previous company, and then after taking over by Z plc, how many shares then she had in Z plc, and after that there was some bonus issue as well. So these are the things that we will have to do now. Right then, so if you go back to the question where it says acquisition of Sepang plc by Z plc and the subsequent bonus issue. Now in this bonus issue, what Z plc has done is that they have given 30 pence as well and some shares too. So they have given two things. But in order to calculate the cost, what we have to do is we'll only have to consider the shares, but not the cash. So we won't consider the cash. We will only take the proportion of the shares, right? So they are giving 2 shares for every 1 shares, and these new shares cost £1 each. So in total they are £2. So what we have to do is let's look at the number of shares she held. So she held 375,000 shares there. So we know that just do working one here. So she held how many shares? 375,000 shares. Now, because she is selling 1 million shares, now in order to calculate Z plc shares, first we have to calculate the shares in the previous company. Now, what the previous company was? Previous company was S Limited. So first we have to calculate the shares in S plc and how much did they cost. The shares was 375,000 shares, but we don't know the cost yet. So in order to calculate the cost of the S plc shares, so we will have to do this calculation. So it is S plc shares, right? Now it is lower off, we know that it is lower off. One is 184 plus the difference between, and it will be half off, difference between 196 less 184. So it will be half of the difference between these two, which is the highest quoted price and the lowest quoted price. And the second one is going to be 184. It is 194 plus 196 divided by 2. So whatever the lower of these two is, we'll have to take that one, and that will be a cost per share of S plc. Now I'll just grab my calculator and we'll do it on the calculator. Excuse me. So 196 less 184, and we'll have to divide by 2 multiplied by 184. It is going to be 190. So it is 190, and we'll have to do this one as well. So it is 194 plus 196 divided by 2, 190, hang on, 194 plus 190, sorry, 190 and 192, I beg your pardon, it's not 194, it's 190, I was just doing that one again, it's 190 and 192, yep, it is 190 and 192, so 190 plus 192 divided by 2, 191. It is going to be 191. So whichever is lower, which one is lower? Yeah, this one is lower, so we'll have to take that one as a cost. Right? Now this is the cost per share. So there were 375,000 shares multiplied by 190. So that is the total cost of the shares. So £375,000 multiplied by 190. So it is 712,500. So this is the cost of the this is the total cost of the shares in S plc. right? Now, as we now have the cost in the SPLC shares, now what we have to do is we'll have to calculate the cost in the ZPLC. Now this cost, which is 7,112,500, we'll have to take this cost to the new cost of the shares, not the cash, right? So only the shares. So we'll have to do that. We'll have to 712,500 multiplied by, so the new company is giving 2 shares for £1 each, multiplied by 2 over 2 plus 30 pence cash as well. So what we are doing is we are calculating only the shares portion, not the cash portion. So in order to do that, what we'll have to do is 2 is £1 each shares, and in here it is £1 each shares and plus 30 pence cash as well. So in order to calculate the cost, because we are calculating the cost of the shares, not the cash, so that's why we only take the cost of the shares, not the cash, right? So we're only taking the cost of the shares. So 7,112 into 2 over 230. So what we have to do, what's the cost? So that is going to be 619. It is going to be 619,565. So that is the cost, right? Excuse me. Now, because they are giving 2 shares for every 1 share, so we know that how many shares they had here, how many shares she had here. She had 375,000 pounds. 375,000 shares she had. So what we have to do now is we'll have to multiply it by 2, because she had 2 shares. She have been given 2 shares in the new company, right? So 375,000 multiplied by 2, which is going to be how much? 375,000 into 2, 750,000. It is going to be 750,000 shares. Now these are new shares in the company, right? Now we know that these are new shares in the company. These are number of shares, and we know the cost as well. So cost is how much? Cost is here. It is given here. I've already calculated. It is 619,565. So 619,565 is the cost. Now what's happened now after that is that because they have been given some bonus shares as well. Now we know that for the bonus shares there won't be any cost, but there will be shares. So the cost is going to be 0, but bonus shares were how many? 2 for 1 bonus shares. So we know that there are 2 for 1 shares. So we'll multiply 750,000 multiplied by 2. So it is going to be how much? 1.5, I think. So it is going to be this much. So these are these are the bonus shares. Now we'll have to multiply the total number of shares, which is going to be 1,500,000 multiplied by 2. Sorry, not 2, plus 750,000. So it is going to be 2.25 million. Right? Alright then, so the cost is going to be exactly the same. Cost is going to be exactly the same, which is 619,565 anyway, but the total number of shares are this much, right? So actually I will just, I will read this one, 612,500. I'll just write down this one here. Right, so the total cost is going to be 619,565. This is the total cost. And we have the shares, total number of shares are 2.25 million. Now these are shares in ZPLC, total shares, and this is the total cost in ZPLC as well. Now at this level we can calculate the cost of 1 million shares. So what we have to do now is we can simply calculate the cost of the new shares here. So it is going to be 619565 multiplied by 1 over 2.25. So this is going to be cost of 1 million shares inside PLC. So let's see, 619565 1 over 2.25. Yeah, this is going to be 275,362. 275,362. That is the cost in the new shares. Now let's calculate. Let's see the difference. 445. 275,362. Yeah, 169,638. 169,638. Right, that is our chargeable gain. Right then. Now after that, in the question it says that she purchased some shares in EIS company worth £50,000. Now we know that when she purchased in EIS company, the shares she purchased in EIS company, she don't have to pay any tax on that. So I'll deduct that amount out of that, which is £50,000. So she can defer the gain on EIS shares, so it will be EIF and deferral relief on £50,000, and she won't have to pay until she sells the shares, or any other event happens like share does not qualify for EIS relief. So it is going to be 119,638. I will have to deduct the annual exemption out of that. And an annual exemption for our current tax year, we know that it is 11,100, and the remaining amount is going to be taxable. So let's see how much it is. 119,638, 11,100, and it's going to be 108,538. And we'll have to pay tax at the rate of 20% on that. So whatever the 20% is, 21,708. 21,708 is our CGT capital gains tax on that. Right? Right then, so we have done our other portion anyway, so I've told you that you just need to read from chapter number 1 if you go to EIS portion, so you just need to read that. So it is exactly the same. You just need 3 points to score 3 marks, and that's it. Right? So that's it for our this video, and we've rounded up our capital gains tax. So that's it for capital gains tax. So we will now see the next topic, which is inheritance tax, in our next video. Thank you very much and goodbye.